Hello, everyone. This is Jeff Wright. I'm the president and founder of Fish Creek Capital, a state registered investment advisor out of Birmingham, Alabama, and just wanted to take a few minutes to tell you how we are approaching the volatility in the market right now with all the tariffs, all the things that are going on the last few weeks. What do you do? I can help you answer that question. We focus on dividend growth investing. What is dividend growth investing? It's a long term, disciplined approach to growing wealth in the stock market. Of course, most people know what a dividend is. It's when a company distributes cash that they are earning back to their shareholders. And of course, when you buy a stock in a company, you receive shares for that purchase. As a shareholder, you're entitled to any cash that a company distributes back to their shareholders. That's actually pretty cool. You're getting a piece of the pie of the money that company makes. Of course, that's a dividend. That's nothing really new. But what we focus on that's a little bit different is not just what dividends are being paid, but how are companies actually growing their dividend. That's a key difference. And again, it's a long term approach to predictability and a little bit more stability in your stock market investing. So we focus on, not just dividends, but the growth of the dividends. Specifically, we have a portfolio of around 30 stocks that we have captured this data. The cool part about the strategy is you can actually use data to come up with these numbers. I'm not making it up. We're not guessing. We're not hoping. You can actually go back 10 years, sometimes even more, and look at how are companies actually paying and growing their dividends. So our model portfolio has 30 stocks in it with an average earnings growth of 8.1%. And I'm sorry, not just earnings growth, but a dividend growth. Key difference there. They're growing their earnings 8.1% every year. So that means as an investor, they're increasing their cash flow, which is a statement of strength for that company. And they're actually increasing the amount that they pay you with that cash. So if you take, again, back to our portfolio, we've got an average dividend of 3.7 annualized yield, and then with a growth rate of 8.1% of that dividend. That's our average of the portfolio of 30 stocks. Of course, 3.7 is not just like some tremendous dividend. It's a pretty conservative number. But even with these numbers, you can create tremendous results over time. And it can just give you peace of mind as we enter times like now where there's a lot of volatility. You don't have to worry about it. Like, you're focused on the long term. And even with lower prices, you're getting more shares as companies distribute their cash back to you. So it's a win-win. Even Again, if you take an annualized dividend yield of 3.7% and you grow that dividend by 8.1% every year, you can, and I'm looking at my numbers here, so just bear with me. So on a principal amount of $100,000 with all those dividends reinvested, at that rate, you can have a yield on the cost of your investment. Let's say that $100,000. By year 8, you're going to yield 8.2% just on the dividends alone. So that means every year, whether the market goes up or down, you're going to be paid by year 8.2% return. That's what you'll make off the dividends that you receive. By year 10, that increases to 10.28%. By year 15, that increases to 18%. This is a return of your money, of your initial investment. And then by year 20, you're going to receive a 31% return just in dividends alone. So that's actually pretty cool. It gives you peace of mind. It's not a perfect strategy. This is not investment advice. This is just for informational purposes only. But if you're interested in learning more about a dividend growth strategy, please reach out at fishcreekcapital.com. I would love to talk to you.